Hi, Ron Benning here with a Sacramento Duplex Market update for the period ending February of 2025. Let's look at the key developing market trends the target break-even GRM is for a Sacramento duplex. Developing trends leave evidence. Watch to the end to see what's likely to happen soon. February 2025 was a neutral market for duplexes in the Sacramento area. We currently have a 3.8 month supply of duplexes on the market. The number of active listings is up 1.4% from the previous month. Sales increased by 5.6% over last month from 18 to 19, and pending sales were up 41.2% in February. So what caused this big increase in pending sales? I believe the mortgage market is the primary driver of these changes. The base interest rates in February came down a smidgen from 6.84 to 6.76, keeping in mind the rate for a duplex is about 0.5% higher than the base rate. The current rates are around 7.25. You can talk to a mortgage professional to get a more precise rate with an APR. As you can see from the chart on the screen, the rates over the last 3 months are at the highest level in 20 years, which makes profitability very difficult at the current prices. So will rates be coming down much in the near future? It's unlikely that rates are going to come down much in the coming months because according to Fannie Mae, the most recent inflation numbers came in with a consumer price index of 2.8% and a core consumer price index of 2.9, which is still well above the Fed's target inflation rate of 2%. This is likely to result in rates not improving much in the near future unless we see a larger downturn in the economy or if inflation rates get closer to that 2% target. Let's take a look at how the current rates affect the target break-even GRM for a duplex with 25% down. The current break-even GRM is about 11.26. As I'm recording this video, there are about 5 duplexes on the market with a GRM at or below 12. In January, the sold prices as a percentage of the original asking price was 97%, which means the buyers on average had about 3% bargaining power. The average days on the market for sold duplexes went up to 32 days, which continues a 3-month upward trend. The current days on the market for active duplex listings was 56 days last month. The one big concern I have about the duplex market right now is the huge expectation gap between the average list price and the average sale price. It is clear to see that over the past year that the average sale price has been falling, and it's fallen by about 4.1% since February of 2024 and 5.7% last month alone. Now, usually when we see this alligator mouth pattern develop, it is a precursor to market changes in the months to come. If you're enjoying this analysis and you're not already subscribed to my channel, please subscribe now so that I can continue to keep you informed about investing in the Sacramento duplex market. So what's likely to happen over the next month or two in the Sacramento duplex market? I'm making a prediction that rates will continue to be stagnant in the short term, and rates will continue to be the key driver of the local duplex market in the coming months. As I said earlier, significant rate relief is at best months away and will require the inflation rate to come down substantially before we see any significant improvement. Based on these assumptions, inventory will likely continue to go up over the next 30 to 60 days. I believe pending and sold numbers are likely to start falling, and the days on the market is likely to start going up if the new sellers coming on the market continue to price unrealistically the way they have been over the last 3 or 4 months. Current market conditions do not justify the average list price going up. I believe we will also see the buyer's bargaining power increasing over the next few months. Overall, the inventory of active duplexes is in a healthy neutral range of just under 4 months supply. I predict we will see the market thermometer for duplexes move further away from the seller's market and closer to the buyer's market over the next few months. Over time, if these trends all continue, we will see a softening of prices, but we are still a long way from a buyer's market for duplexes. For potential sellers, it's time to realize that prices are no longer going up. And in fact, on average, the prices have started to come down during the last year by 4.1%. Now, if you're looking to sell soon, you should price slightly below the most recent closed sales in your area. But understand that the value of your property will be set more by the competitiveness of your rents and the current GRM than comps. If you want a rent analysis or an update on your property's value, give me a call or look for the link down below in the description. For buyers, I wouldn't be expecting rates to come down anytime soon. The best strategy is to target the best deals and act quickly. Realizing over time that rates will likely get better, this might be a good time to consider an interest-only loan until rates do come down, and then to refinance into a lower interest rate loan. Whether you're thinking of buying or selling in the next 7 days or 7 months, feel free to give me a call or text me so that I can answer your questions and I will help you plan a smooth purchase or sale transaction.